For Bitcoin in particular, I mean, Bitcoin, of course, is it's kind of like uranium. It's on its own cycle. It's doing its own thing. It can still be impacted by liquidity shocks, other things like that. Like, pretty much every asset went down in March, for example. But for a multi-year view, Bitcoin tends to be very correlated to its 4-year supply halving cycle. And so my bullish case since April of this year is that Bitcoin is likely to do well through 2021 and could potentially get more overbought than people think. If the dollar does continue to weaken, like say, we'll test, we'll see what happens when the dollar index gets around 88. But if the dollar were to continue weaken, especially against emerging market currencies, that's historically pretty good for commodities for two reasons. One, of course, is that commodities are generally priced in dollars. So if you get a weaker dollar, that's beneficial for their dollar price. In addition, that weaker dollar tends to be good for emerging market growth, which is that's where most of the population is. That's where a lot of the commodity consumption is. That's where a lot of the global economic growth comes from. And so if you get that uptick in emerging market performance, later in 2021, that can be very beneficial for many types of commodities. And of course, they all have their own unique differences. So, for example, copper has done very well this year because there never really was a big supply glut for it in the first place. And so, after the initial volatility it had, it's performed very well. In addition, you've had some supply reductions due to unrest at some of the mines or closures at mines. But of course, in the energy space, we've had a long period of oversupply, and so that's taking much longer to work out. In addition, we've seen some life out of uranium. The interesting thing about uranium, of course, is that it's on its own supply-demand characteristics. It's not really tied to global growth. It's kind of operating on its own cycle. So it's a nice diversifier. And then, so as those forces play out, the combination of a weaker dollar and then the global growth that can come from that, it just tends to be historically a very strong period for commodities. If you use Bitcoin as a settlement asset or as a reserve asset, it's basically it's neutral. It's not tied to any one currency. There's nothing that can sanction you from using it. There's no one that can turn off your Bitcoin or block you from doing transactions. And so in a world with less centralization and more distrust and more actors wanting to be able to do their own thing, incorporating Bitcoin is one of the ways that they can go around that. Now, it's still, I think, premature to discuss that too much because again, Bitcoin is still a very small asset. I'm mostly emphasizing Bitcoin as there's a couple ways to look at it, but essentially digital gold as a store of value that is backed by the network effect of Bitcoin, that is backed by the scarcity of its supply. But if it were to continue to do well in that particular sense, then it opens up questions. What could be next? Could we see it show up on more central bank balance sheets, or will it ultimately be limited to just a store of value for private actors?